Every year, millions of Americans pay thousands of dollars in taxes without realizing they could legally pay much less. The truth is the tax code is full of hidden deductions that most people never claim. Some of these deductions could save you hundreds, even thousands of dollars every year. In this video, we're revealing the hidden tax deductions most Americans miss and why the wealthy take advantage of them, while the middle class often doesn't even know they exist. Why most Americans overpay taxes. Most Americans believe taxes are simple. You earn money, the government takes a portion, and that's it. But the reality is very different. The U.S. tax code is thousands of pages long. It contains hundreds of deductions, credits, and exemptions that can reduce the amount of tax you owe. The problem is that many taxpayers don't know about them. Some deductions are hidden inside complicated rules. Others require documentation that people forget to track during the year. Because of this, millions of Americans end up paying more tax than necessary. And interestingly, wealthier individuals often benefit from these deductions because they understand the system better or hire tax professionals who know how to find them. Understanding deductions isn't about cheating the system. It's about using legal rules that already exist to lower your tax bill. What is a tax deduction? Before we dive into hidden deductions, it's important to understand what a deduction actually is. A tax deduction reduces the amount of income that is subject to tax. For example, if you earn $60,000 in a year and claim $10,000 in deductions, you may only be taxed on $50,000. That means your taxable income becomes lower, and your total tax bill decreases. There are two main types of deductions: standard deduction, itemized deductions. Most Americans take the standard deduction because it's simple. But many people who itemize deductions can save significantly more money if they track their expenses carefully. Hidden deduction: state sales tax. Many people don't realize they can deduct state sales tax in certain situations. This is especially important for people living in states without state income tax. For example, if you make a large purchase such as a car, a boat, major home appliances, you may be able to deduct the sales tax paid on that purchase. This deduction can significantly reduce your taxable income. However, many taxpayers miss this because they forget to keep receipts or don't know the rule exists. Hidden deduction: home office deduction. Since remote work became more common, the home office deduction has become more important. If you use part of your home exclusively for business, you may qualify for this deduction. Expenses that may qualify include internet, electricity, office furniture, a portion of rent or mortgage. However, the key requirement is that the space must be used regularly and exclusively for business purposes. Freelancers, entrepreneurs, and self-employed individuals often benefit the most from this deduction. Hidden deduction: job search expenses. If you're looking for a job in the same field, certain job search expenses may qualify as deductions. These could include resume preparation services, travel expenses for interviews, career coaching, job search websites. Although not everyone qualifies, people who actively track these expenses can potentially reduce their taxable income. Many people never realize these costs might be deductible. Hidden deduction: medical expenses. Medical costs can become extremely expensive in the United States, but some of those costs may qualify for deductions. Examples include doctor visits, prescription medications, dental treatments, vision care, health insurance premiums in some cases. If your medical expenses exceed a certain percentage of your income, they may become deductible. This deduction can provide significant relief for families with high health care costs. Hidden deduction: student loan interest. Millions of Americans carry student loan debt. The government allows borrowers to deduct student loan interest paid during the year. Even if someone else helped make the payments, the borrower may still qualify for the deduction under certain conditions. While the deduction limit isn't extremely large, it can still reduce taxable income. Hidden deduction: charitable donations. Charitable giving is one of the most commonly overlooked deductions. People often donate items such as clothes, furniture, electronics, household goods, but they forget to document the value of those donations. If recorded properly, these donations can be included as itemized deductions. Even small donations throughout the year can add up. Hidden deduction: retirement contributions. Contributing to retirement accounts can reduce taxes today while helping build wealth for the future. Examples include traditional retirement accounts, employer-sponsored retirement plans, self-employed retirement plans. These contributions may lower your taxable income significantly. This is one of the strategies commonly used by financially savvy individuals. Why wealthy people pay less taxes. Many people wonder why wealthy individuals sometimes pay lower tax rates. One major reason is tax planning. High-income earners often track deductions carefully, use retirement contributions strategically, invest in tax-efficient assets, work with professional tax advisors. These strategies are legal and available to anyone who understands the rules, but most people never take the time to learn them. Taxes are one of the biggest expenses in most people's lives. Yet many Americans spend more time planning vacations than learning how taxes actually work. The truth is simple. The tax system rewards people who understand it. By learning about deductions, tracking expenses, and planning ahead, you can legally reduce the amount of tax you pay each year. And sometimes, the difference can be thousands of dollars.